of purchases. Once this is done, I think you are good to go. And if you're good with the system, then you can use Excel, a spreadsheet, either Google Sheet or Excel. Then you can just start planning that, or you just get the competence or get someone to do this for you. Then there are some softwares off the shelf that you can key into. You can subscribe. Some of them are subscription based on the outright purchase, like these ones I've listed here: QuickBook, Web Accounting, FreshBooks, Zoho Books, Zero. Those are online. They are cloud-based, mostly mainly cloud-based applications where you subscribe and you're able to use them to track your expenses and also your income. So those are the tools you can use for your income and expense tracking. Also, there are they also have some budgeting and personal finance apps that helps you prepare budget. These are also off the shelf and maybe cloud-based applications. You have Mint, then you need a budget. That's YNAB, then Good Budget. All of them are available. If you are hearing them for the first time, you could also consult Wide. There are other ones too that you can use. Then the ready-to-use templates. These are formatted templates. They have been formatted and the cells tied together like Excel templates. Some consultants do this. They will help you tie these cells together, put your any figure into it. And at the end of the day, you can see in one dashboard how your business is doing. So there are some templates like that you can, some of them are also like professionally done. Some can be done locally by some experts here. They just tie all the cells together and they'll tell you not to fiddle with the instructions. Just put in your figures and it reports. And at the end of the day, you're able to see your dashboard, you see your financial position or financial statements in clear terms, and you should be able to prepare that. So those are some of that we use. Also, for you to now, the key features you need to look out for when you want to buy or acquire any of these financial tracking tools. You should have income category. How do you recognize your income? Where your inflow, your sales, revenue, grants, when you receive investment services, you should have that component. Expense category too. You should also have where expenses will be tracked, then how to calculate it automatically. It should be automated. Where you put this, you put the details of the figures, then automatically it calculates for you. Those are the things that you should look out for. I'm not recommending any specific off-the-shelf application right now, but you should look at for this and also seek professional help or guidance. It must have reporting function and you should be able to integrate with some other devices you use, like the POS system and so on and so forth. I know some of this can be very out of reach for some of our SMEs, but we can also try to look at the cheaper ones or the ones that are formatted. Like I explained that some experts can help us format these tools to serve us better. What are the benefits of using these tools? Prevent overspending. When you budget, you know who in January we're not supposed to expend more than 50,000 or 200,000. By the time your expenses start hitting 250,000, you know what to just spend that. They want to buy this. Diesel is 50,000. The budget for diesel is this. And we must not exceed this amount for diesel. Okay, what alternative do you have? Do we get inverters? So those are things that will help you plan. Once you have a budget, once you have a budget and you are tracking your expenses, then you can compare. Were you able to meet our target? Did we surpass our target? And how do we better improve our performance? Then also you can also drive your sales team. If you have budgeted that, quarter one, we're going to do 5 million, and it's maybe February, and you know quarter one is going to end maybe around March, then you can drive your sales. You tell your sales team we need to do more because we're not hitting targets. So that's one of the things of budgeting or tracking and comparing what you have tracked with what we have put on paper. Then, like I said earlier, it also supports data-driven decision making. You're able to take decisions based on clear indicators. So another thing that's of importance that we need to know when we're doing the financial management or financial planning is this cash flow and profit. I think a lot of us confuse this, a lot of us confuse it. Profit, what is profit? This is the amount you make after you've paid all your expenses and you subtracted everything, then it's left for you to spend. And it doesn't even belong to you, it belongs to the business. That's why some people pay themselves in the business. They earn a salary from their business, try to differentiate their income, the business income from their own personal income. If you are someone that doesn't do that, and you believe every money that comes into your business is your money, then you are making a very big mistake. So it's better you place yourself on a salary. You place yourself on a salary in your business and say, okay, at the end of the month, once you are paying your staff, you pay yourself too. Whatever is remaining at the end of the month is for the business. That is what the business falls back on as reserves and can be used for expansion. It can be used for, but at the end of the day, you can now reward yourself. If the business does so well and all you have enough reserve or retained earnings, then you can try to, okay, how do we apportion these retained earnings? You can try to take dividends for yourself and enjoy yourself for a good work. So, but profit should be different from what? Your cash flow. But another thing here that we need to note is that profit can be paper-based. You can be profitable on paper and you don't have money to pay your bills. That's where the problem is. So like I was saying here, profit, types of profit, we have gross profit. That's when you revenue minus cost of goods sold. I don't know if that's a bit self-explanatory. When you buy, when you sell, you now ask yourself how much did went into the production of what was sold. You make a phone and you sell the phone maybe 500 naira. How much was the input to make that phone, to sell it? I mean, to produce that phone. You remove the cost there. That's what gives you your gross profit. Then, okay, how much went into maybe marketing, transportation, overhead, lighting, and everything. Once you take that one away from it, you have your operating profit. Then the net profit is when you now pay your taxes to government, you pay on loan and other expenses. Is when you now know your net profit. So all those expenses are in layers. Once you do all of that, and that's why we said you need to know, do all of this documentation. You need to do all of this documentation. The accountants will now come in and now classify the expenses according to their expense head and put them in the books. Like I did an example. I said if your grocery sells 1 million worth of bread in a month, and you expend 700,000 on ingredients, wages, and utility, your gross profit here. Your gross profit. Why? Because gross profit in the sense that these are the 700 comprises the input to produce the 1 million worth of bread. Ingredient that directly went into it, the wages of the labor that produced it, then the utility, maybe the electricity that you use, the oven, and all of that went into it to give you your gross profit. But that 300,000 is not your profit, it's not your full profit. So you have to still remove or deduct some other expenses from it before eventually you get at your net profit. So those are the things we need to start getting so that you don't, after paying your bills, paying all those, you 300,000, I have money, and you start spending money as if you have money. You might not have anything because you have not paid some of your important bills. So cash flow, on the other hand, is what is available, the funds that is available, the money you have available, cash. Cash. They always say cash is king. Cash is king. So if you have cash, then you can do a lot of things. So cash flow measures the movement of money in and out of the business. Like I said earlier, you can be profitable on paper, maybe because you are selling more, but you are selling on credit. You are selling more, you are selling on credit. And even to get back your money from the people that are owing you, you even have to spend some other money. There was a time I was selling palm oil, and I didn't understand how the market works. And I didn't know that you have to drop your wares with the channel you are using to sell. You drop your wares with them, and you come back for your money. And anytime it now became the burden, they will collect it. When you bring your wares, they will collect it. But when you go back to collect your money, that's where the problem is. So I didn't understand the dynamics of the market at that time. So basically, I had money. I had sold. I record in my books. I have sold a so number of kegs of palm oil. But where's the cash? The cash is with the people I sold them to. So at times I'm profitable, but I don't have cash, and I'm unable to quickly turn over the cash to buy other stocks and also do that. So that's why we need to understand our cash flow system. How, to what extent are we giving credits? How many, what's the timeline for credit repayment? Then also how do we benefit from credit facilities? Do we have longer payment term for our own credit facility and shorter payment from our own customers? If you're able to do that, those are the things some big companies do to finance most of their operations. When you do a job for them, they tell you have 2 months, 3 months before they pay you. So that's like a source of funding or financing for them. But you, as a small business, you need to balance it, because maybe that's what you have to do to ensure that people know you, or you get patronage, or you need to balance it so that you will not sell too much and tie down good money or tie down your capital without having access to your funding, your funds when you need them. So, but for accounting sake, cash flow is classified into three: operating cash flow generated from regular business operation; investing cash flow from buying or selling assets, like maybe you buy shares, you buy stocks, and so on and so forth, and the returns you get. Then financing cash flow from investments, and payments of dividends. So basically, like I said here also, if a bakery made 1 million in sales, but customer bought on credit and only paid 500 that month, your cash flow is 500, not 1 million. So you sold 1 million truly, but what do you have? You have 500,000. So what happens if you have an expenses, or there's a need for you to spend 700,000? What happens? You can't spend. So the other thing is you have to go and borrow at a cost. You have to now pay at a cost. The cost of borrowing will come into it. So what we are trying to do is, how do you ensure that any money you bring into your business is sustained? Is sustained. There will never be enough money, except maybe you've done some fantastic work and the business is booming, and you are able to balance between your cash flow and your profitability. So basically, those are the things we need to do. Like I've tried to explain this in our earlier slide, a business can be profitable but fail due to poor cash flow, unpaid invoices. You've issued invoices, you keep fighting people. Like I said, some companies have payment policies because but they tell you, oh, if you do business with us, we only pay after 30 days. Oh, we pay after 60 days. You can do that, but you do that to smaller people, people that you're bigger than. Most of them are bigger than us. The big companies of this world, that's what they do. And what they do, that's a financing strategy. They're using to ensure that they are liquid. They don't just pay money. They are using your goods that you have supplied. They are using your services to also increase their own productivity, and they're not paying on time. So over time, they now pay you, and you think, oh, thank God, you go and do Thanksgiving that I collected my money, but some other people are benefiting. A business can have positive cash flow, but not be profitable. That's another one. If it's relying on loans or asset sales to flow there to stay afloat, you have cash, but you're not, maybe you are underpricing yourself. And that's why I said you need to understand the value chain or the ecosystem before you do any business. You need to understand the value chain ecosystem, because if you go into any business because everybody is making money there, and you have not done your homework, you have not done you have not built your capability, you are likely to run into problems. So, like I said investors and lenders often assess both that's both your cash flow and your profitability before making funding decisions. No, but if you package your document and submit to a LESTF now, they'll have to go through all of these things. This will you be able to pay? Will this guy be able to pay us? Are you sure? They'll look at the trend. How much did he make in January? How much did he make in February? When does it peak? When does it go down? Is he owing this? Does he have any loan elsewhere? Those are the things all these financial intermediaries do. So that's like the major difference. I try to explain here to look at the major differences. What the profitability measures your financial performance. You know whether you are doing well or you are not. Cash flow measures liquidity. Do we have money to do what we want to do now? Do we have money to do what we want to do now or not? What's the focus? Accounting base. It's based on accounting. Actual cash available for operation. Cash flow is what? Cash. Excuse me. Cash show timing, can show a profit even if cash hasn't been received. I've said that. Then it shows real-time ability to pay your bills. That's cash flow. Importance, indicate if the business model is viable. Yes. If you are profitable, shows you are doing well. It shows that the model you are practicing is working, but you also need to improve your cash collection strategy. Now, creating and sticking to a simple budget. Now, like I said, like I've been explaining, we need a budget to run with. Every business needs a budget. I know a lot of us don't do it. You might think it's a waste of time. But to help you with your finances, to help you, and to help you show direction for your organization. Where are we going? Where are we going this year? If you sit down, maybe the first 2 weeks of the year, or even before the year runs to an end, maybe like the last quarter, you start thinking ahead of the new year and ask yourself, how do I want to play? What major bets am I going to play? Bets in this new year? What fraction of the market do I want to capture? In which league do I want to play? You ask yourself these questions and you now start documenting them. Oh, I did 500 this year. Next year, I should be able to do 1,000. So when you have a budget, it provides the needed incentive to motivate you. You're able to drive, you're able to run with it. Okay, I did this year. Next year, what do I do? If I want to get this, what do I do? You now start marking them down. It shows a clear roadmap, helps to track. Then when you have your budget, you now know income, expenses. I don't want to go beyond this. This is what this is going to, I'm going to use this to get this and to get that. Then guide investment and expansion decision. By the time you actualize your dreams or your budget target, then you're able to say, okay, this excess that we have, what do we do with it? Are we going to invest it? Are we going to invest in financial investment? Are we going to be expansion and so on and so forth? Then it also helps to show that you're a serious business. It shows you're a serious business to lenders, to funders, to grant givers and partners. So if you do that, then you are on the right track to ensure that you have access and the right liquidity for your business. How to create a simple budget. One of the things I take away from this session is you should be able to track your income, list all your sources of income, break them down. The easy example that comes to mind was the one I used earlier. Like I said, someone that is into educational services. Oh, what do I do? You know, when does registration comes on board in the year? Oh, last year I did 10 students. Now I need to do maybe 50. If I want to do 50, what's the cost? What's the expense on that? So you now say, okay, from NECO, from WAEC, from GCE, from NYSC, this is what I anticipate. You list them out. Then you look at your historical data. What did I do last year? Oh, now let me project. And also, you don't need to, you need to be ambitious. Your budget needs to be ambitious so that you know that this is what we're running with. But also, you need to be conservative based on your resources. What resources do I have? Or will I be able to access funding to also increase to scale my operations? If you are unable to do that, then you need to be conservative and just have marginal increases around what you want to do. Then you list your fixed and variable expenses. What are your fixed expenses? Your rent, your salaries. That's what you have to pay salaries. Because if you don't pay salaries, you won't have the complement of your staff, their service. You will not have that. And if your staff are not motivated, then your budget or your projections will not be achieved. So like now you need to know that, look, and that's one of the things, especially those of us that have a very flexible income flow. You know that if you don't do well, then you'll not be able to pay salaries. That's on statutory payments. You have to pay insurance. If you have a loan, you have to pay it. Then variable expenses, raw materials, you should be able to track all of this and have details of what all of this is doing. The marketing, transportation, all of that you need to document. Then unexpected costs, you have to provide for them. You are using the car, you know definitely the car one day will have issues. That one is a given. If you provide for them, maybe you are in a very risky business. If you know you are in a very risky business, and then you can also provide for legal fees, or is it indemnity insurance? You also buy indemnity insurance, penalties. Those are things you look, okay, oh, maybe at the end of this quarter, at the end of this year, I know maybe plus or minus. Okay, let's budget like maybe 500,000 for this, and you make sure they are there so that when issues come like that, you can easily access such fundings and to take care of it. Then contingency funds too. We don't know, we also plan for the unexpected. So if you don't have insurance, and also even if you have insurance, you know, before the time between when an insurance claim crystallizes and when they will pay you might take a while. So you could quickly get some funds to block those shocks and ensure that business continues. So those are the things we need to understand when trying to prepare our budget. Then separate our needs from our wants. Needs, essential costs to keep business running. You need those ones are needs. Wants, oh, maybe you feel this office, you can paint it better now. You need some, though you need some convenience, you need some conducive environment for your business to thrive. But there are some things that are essential, that some are essential, some are not. Oh, you want to start? Let me just give you an example. When I started work initially, they used to give us tea. I don't know if they do it at LSTF. They give us tea, they give us milk and Bonvita and all of that. But after a while, they cut it off because there was not, though there was enough motivation. Maybe a lot of us now will not rather eat at home, come to the office to come and drink their tea. So that will keep us till lunch. So we only bring lunch to the office. So what we are saying is there are some things that are good to have, but they are not important. They're not important. Whether you have it or not, the business will run. But once your business does well and you feel you need some level of comfort, then you can buy them. But you don't make provisions for necessary things. So that's why I said that you said cover needs first, then allocate for growth or want. Maybe when at the end of the year the business thrives, then you can give a pat on the back to yourself. Then set financial goals, short-term goals. You want to break even. You want to pay all your debts. You work hard so you pay all your debts. You want to ensure that there's steady cash flow. Medium goals, expand product line. Yes, new equipment. I want to scale. I want to scale my production. I'm doing one particular business now. I want to move on to the next one. You start targeting. Then long-term goals, open a new branch, attract investors, expand to newer locations. Then there's this other rule that we need to apply: how to allocate our funds in the office. Mainly for SMEs, the 50-30-20 rules. So essential operating costs, make sure that whatever comes in, 50% goes to operations. Then 30 maybe you allocate that to for growth. That's then 20% to savings. This is net. That's whatever is left after paying your operations, paying all your expenses, your profit at the end of the day, your net profit. You now allocate it. How do I do it? That down is your internal consumption. It's not for anything. No, look, I made 5 million this year. The 5 million belongs to the company. But how do we do it? Allocate. Now say, okay, we plow back maybe 2.5 million back, then 30%, about maybe 1 point something to maybe try to expand skill, get ourselves known, and also increase our brand awareness, then also save some money for the organization. So basically, that then one of the most important things is also monitor and review monthly. It might seem difficult. A lot of us are always carried away with activities. We just want to sell. We just want to run. So have they supplied that goods? Have you running after customer? But you need time to sit down and reflect. Oh, and look at the numbers. Oh, this is what we budgeted for this period. This is what we made. Oh, fine. We all did well. You clap for yourself if you did well. You celebrate some of the wins you make. Yeah. Oh, we exceeded budget here. What happened? You look at it. What did we do? Oh, there was this period. Oh, there was flood. It was raining during this period. That's what happened. You learn from all of this and you plan better. Then adjust based on performance. If it's well, if you've done well, you know you have done well. If you're not done well, then you recalibrate, you reassess, and you rebuild to launch. So another critical is monitoring and review monthly. Monthly. That's why large organizations they have what we call management accounts. Every management meetings, they have meetings to review their performance on a monthly basis. Everybody does that, and that's why a lot of investment goes into all these financial documentations. We need to do that. I know a lot of us are busy. We claim we're busy, but those are necessary things that we need to do. How to stick to the budget? You need to be disciplined. Yeah, everything in life requires some level of discipline. You need to try and see if you can automate your payments so that all of these things are captured fair and well. Involve your team. You have to ensure that you tell your team where you are going all the time. Oh, this is why we are doing this, and I want you to understand this. I believe if you do this, this is going to be the result. Then you review monthly, quarterly. Then I said reward compliance. When you meet your target, when you meet your budget, celebrate. Not throw a party with your team. Just you guys, thumbs up. You guys did well. Maybe one of the things, and you continue. There's a no. That's just a little motivation for them that you guys are doing well. It might not be monetary. It might not be just okay. Buy maybe out of the office. What's it called? Impressed. Buy some drinks for everybody. So everybody knows that they appreciate our effort and we can do more. And if the company does well in the new year, maybe you improve everybody's remunerations. So those are how businesses stay afloat to ensure that their finances are done properly. Now, a lot of us will say, I'm not financially inclined. Yes, I'm not a finance person. I don't understand all this grammar this man is saying. You might not understand, but it's essential. You need to know. I know everybody knows how to count money, and everybody knows how to add one or two monies together. So you need to take time to immerse yourself in some of this knowledge as a finance, as a business owner. You don't have to know how to debit and credit, but you know it's simple. Now accounting is even so straightforward. They do it in they don't do the T account again. Everything is in a straight line format. You just look at it, you can see, and everything is done for you. So you know what's your income, your expenses, your profit. You can see at a glance. So basically, you don't. There won't be any excuse for you saying, "No, I don't understand what these people are saying." The thing is, one of the major things is you need to separate yourself from your business. You need to separate yourself from your business. Open a dedicated business account for your business. That's another a good way to manage your finances. Avoid mixing personal expenses with business expense. Somebody comes to your office, they want to buy diesel at home. You tell the guy at the till, oh yeah, give them money to go and so it's at home, which is supposed to come from your personal pocket. But you are telling them to take money in the till in the office to pay them. You are already conflicted. You are setting yourself for problems. Some people will do it and go away with it. But if you do something wrong for a very long time, over time, you mess yourself up. that do and you can take that to the bank. If you do something wrong and you are consistent in doing something that is wrong, over time you mess yourself up. So except you are going to be funding your business from other sources, because what you are doing there is what we call drawing. You are drawing from your capital without you knowing, except maybe you are going to replace it back. You are drawing from your capital. So I said this simplifies tracking and help build credibility with investors or banks. All these things we are saying here, once you have your documentations ready, fine. It will be difficult for investors and banks to turn your applications down. You need to track every expenses. I've explained it earlier. Expenses are things you expend, money you pay out of your business. Record all business-related spendings from stationaries to rent. Just record it. If you have this record, it will be easy for any business, any accountant to prepare your books for you. I can assure you. But if you have incomplete records, it will just be interpolating, be saying, "Oh, what is it?" Now be estimating. They'll be estimating for you. An estimation here could also lead us into, because we will not be too sure. But when you have your records, no matter how simple it is kept, just keep it. Keep them. If you ensure that, then you are able to track and manage and monitor your expenses and your income. Then use simple accounting software. Like I said, you can also get help from the experts. They put you through. You get someone that will also go through all of that, helps you, put you through. There's nothing wrong in sitting with your staff. "Oh, come and explain how you do these things to me." They explain to you. After all, you are the owner of the business. And once you understand that, then you've picked that knowledge and you run with it. Cash flow in check. You don't expend, you don't overspend. You don't overspend. So you already know this month you must not exceed this. It's just like some of us that have children in school. You know what your pocket can carry. Abi? So you know the schools your children can go or not. So those are the kind of things I know how well I can afford this. So that's how cash flow is. You have said, "Oh, this month, this is it. Oh, we should exceed it." But the inflow should be the ones you should prioritize, so that when your assets are sweating to make the money, then you ensure you know that, oh, you are really done well. Understand the basics. As an entrepreneur, you need to go and learn. It's a compulsory now for you. What is assets? Or what are assets? What are liabilities? These are jargons, accounting jargons. In simple layman terms, assets are the things you buy that helps you to produce. Like some of us that are in knowledge business now, our brain is what we use to produce, Abi. But we also need some office space. We need internet. We need a laptop. Those are the assets. Those are the things that ensure that we're able to produce. Liabilities are the things we are owing. We should borrow money is a liability. All of us, those of us that have loans, these are liabilities. You need to know that income who have made money. This one belongs to the business. Expenses. Expenses are there. Oh, I'm buying water, I'm buying this, I'm buying that. Then equity are the monies that they are capital for the business. What the business owns. What the business what owns. Now there's this accounting equation that says liability plus equity is because how do you fund your asset that helps you to produce? You either you either you either liability and equity. You either borrow the money or you source it yourself. You either borrow the money or you source it yourself. So basically that's what we need to do. Then budget and forecast. You need to produce budget, then you forecast and things like that. So compare actual spending to your budget regularly. Forecast future revenue and expenses to stay prepared for growth and downtime. Now, bookkeeping tips, get help when required, comply with tax early, keep backup records. You need to back up your records. If you maybe at the end of every month you photocopy your documents. Can you, sorry, can I just, I'm coming. I'm sorry about that. What was that? Can you hear me, please? I can't share my screen is not sharing again. I don't know why. You can hear me? The
Yes,
screen,
sir.
I'm not changing the screen again.
Oh, your screen is still perfectly fine.
The screen is fine.
Yes, sir.
Wow, okay, let me see. Okay, this is what's I've lost my screen. Let me stop sharing and come back, please. Okay, sorry about that. I was actually supposed to be in another meeting. I think I was here. Supposed to be in another meeting. That's why I was called for the meeting. Okay, like I said, two people tips, get help when required, comply with your tax early, keep backup records. You need, like I said, the records are critical for your business. Either make photocopy at the end of the month and take them home so they have record. And if you're keeping them electronically, get a backup and ensure that you back up your and keep it far away from the office because of eventuality. So those are the things we need to know when keeping our record, so that at every point in time, if there are eventualities, can always fall back on something to do. Then common financial mistakes we make, we don't have no clear understanding of the business venture. Like I said, there's no point going to any business if you are not learned it. I don't think because everybody is doing well in this business, you're also doing, you think you're going to do well. You need to go and understand that business, understudy that business. And that's why I give it to the Igbo apprenticeship system, where you serve a master for maybe 4, 5, 6 years. And at the end of the day, you understand every aspect of that business. Then they will settle you. So you are not going with just funding, you're also going with capabilities. So as an SME, we need to understand the business we are going into. So that one is clear. If you don't understand, you are going to lose money. You are likely, I'm just, let me put it in quotes, you are likely to what? Lose money. Then mixing personal and business finances together, I've said it earlier, you don't have to do that. Know your business, pay yourself salaries in the business, pay yourself. Poor cash flow management, that's what the essence of what we are doing now. Poor cash flow management, that's what we are doing now. So we need to understand how to manage our finances and our cash flow. Then common financial mistake, lack of proper record keeping. I've been explaining that. Overestimating revenue and underestimating cost. When you overstate revenue, maybe those ones are major projections. You just believe I will do 20 million this year. Whatever the case is, I will do 20 million. No, then cost you now, okay, I can do this, I can squeeze this in, I can, those are not, just be realistic. There are parameters for doing estimates. There are parameters and which an expert will probably guide you through. You should know, okay, this can't grow more than 30%. Just like the cost of your cost of production should not exceed a fraction of about 1/3 of what you are using, so that the other 1/3 will be able to go into operations, and 1/3 for the profit part of the business. So there are parameters or estimates that are used to do some of these things. Then another mistake you can make is thinking that planning, budgeting is nonsense. A lot of people think it is nonsense. A lot of people think even big corporations do what we call strategic plans. I can assure you that every year they sit together, they plan what they want to do. Some have 5 year strategic plan. 5 year strategy plan, they do it. So if a big businesses does that, well, because they will say because they have the resources to do what they are doing. No, it starts small. Knowing what you want to do, how you want to do it. Those are the things you need to do. A common mistake also, over-reliance on debt. A lot of us borrow becomes an issue for us. We're unable to pay. So that's why I said it goes back to what you are doing, understanding what you are doing, ignoring tax and compliance also. failing to reinvest in your business. When you make small money, you think you have made all the money and just keep enjoying yourself. No. If you fail to invest back in your business or other investments, then you are not doing what you're supposed to do. Using financial record to assess funds, I think this is almost rounding up. Financial records to assess financial. I said one thing here is this: let your records do the talking. Let your records do the talking. Let your record. I said I can't say it more than that. You will not be there when they are evaluating your documents. You will not be there when they are evaluating your documents. They might not call you to come and explain anything to them. They might not call you to come and explain anything to them. So do your documentation properly to ensure your documents are well. So using financial records to assess loan on grants. I said here, financial records are more than just numbers. They provide evidence to banks. They are your evidence, investors and grant provider, indicating that the business is credible, well managed, and capable of repaying loans or putting funds to good use. So if you do it properly, I can assure you, once you submit your documentation for anything, when there is need now, then you will be granted access to such funds. The more organized, transparent, and accurate a business record is, the more lenders and grant provider will trust that business. Demonstrate business credibility. Banks and grant provider wants to see if a business is legitimate and well organized. I cannot emphasize more than that. This shows little beginnings. When you start doing things properly, then you will go places. Showing business performance. When you also your records shows your performance over time. Your records will show you, lenders and funders want to know, is this business profitable? Your profit and loss statement highlights revenue trends, expenses and profits. Consistent growth reflects in your books increases your chances of loan or grant approval. So these are things that, like I said, lenders, funders, and other banks want to know. It also justifies the loan. You can't say you want 10 million, and in the last 5 years, your revenue has been 3 million. And you are telling them, oh, once you give me this 10 million, I will do 20 million, I'll pay back in 12 months. And the records will tell you, oh, 3 million. In the last 5 years, you're averaging 3 million. So those are the things that justifies, oh, okay, this guy, if you give him maybe another 5 million, he should be able to do it. Okay, if he's able to scale, then he will return this money on time. So those are the things that you need to do. Highlight business asset and collateral, all those things. Your balance sheet will show all the things you own. Then it can be used to do your business plans and also proposals when you want to write proposals. It shows your historical data and historical fact that you put in your documentation. Then providing tax compliance, proving tax compliance. It shows that you have been complying with taxes. So those are things that your records will do. And if you don't do this, they are likely not to be able to plan, manage your finances very well. That's why we're emphasizing on this thing. So these are some of the templates you need to know. And you need to acquaint or familiarize yourself with your income statement. That's your profit and loss. Your balance sheet, which shows your assets and liabilities. Your cash flow statement will show how liquid you are. Your bank statement, these are from the bank. Some of the things that will require when you want to assess funding, bank loans or grants. Your tax returns, your debt and loan history, if any, then business plans with financial projections. So these are some of the things that you require to do something. So I think that should be the end at this time. I want to thank you for listening.
So much, Mr. Olushola, for such a very, very insightful session. I'm very sure a lot of our participants today will agree with me that today's session has been very packed, well packed. So for those that probably joined us halfway through and would like to, rewatch this session, so please go to our, you can go to our YouTube channel at Lagos State Employment Trust Fund on YouTube, and you'd find this exact session there for you to go back and rewatch this particular session. So just before we go into the Q&A, for those that might have Q&A, please use the Q&A box to drop your questions and they will be attended to even as we go into the question and answer section. So please, there's a poll that's been launching. Please, it's very important that you please fill this poll. So please kindly help us fill this poll. Your feedback is very important to us. So please fill the poll that has been launched on your screen. Thank you. So for those that are requesting for the slides, they will be shared with you via your email. Please do ensure that you fill this poll, because the poll is one of the ways where we get the information that we need and where we can send the slides to you. So please, the poll has been launched on your screen now. So please kindly fill the poll. Thank you. So Mr. Olushola, someone is asking, how can we get a formatted Excel sample and for business meetings in order to have a good dashboard? So Mr. Olushola, I think someone is asking if they can also have your number.
Oh, okay. Maybe the Excel there. I think maybe let me just do some further research on that. I can't really. I have one. I used to have one I used to use then, but the vendor had relocated to Canada. So and you will not get the kind of support that you require. But I think I'll make some further inquiries to see if there are any formatted Excel sheet that is readily available for use right now. So, but like for my number, you can be shared with them on the platform, please.
Okay. So please, while we wait for more questions, please can you kindly fill the poll that's been launched on your screen. Please, it's very important that we get your feedback. Your feedback is very important to us. This helps us serve you better. This helps us, put better structures in place for you, and also bring up more sessions such as this for you so that you can learn from them. Thank you so much. Even as we look forward to more of your responses, please, the poll has been launched on your screen. Please kindly fill. Thank you. We will wait for more people to fill the poll. Thank you so much for those that have filled the poll so far. Please, if you're yet to fill, please kindly fill the poll on your screen. Thank you. So for those that would like to rewatch this session, please go to our channel on YouTube. Go to Lagos State Employment Trust Fund, that is LSETF on YouTube. I'll be dropping the link to the channel. I'll be dropping the link to the YouTube channel on your screen in the chat box right now, so that you can go to the channel. For those that probably have missed out on maybe you joined us halfway through the session and you'd like to go back and pick up some of the, or even those that even started with us from the very beginning, you would like to go back, refresh your memory on some of the things that you've learned today, you can please go to our YouTube channel and Lagos State Employment Trust Fund on YouTube, and you would have an opportunity to have access to rewatch to the video and watch this particular session on here. So please, for those that have questions, please drop your questions in the Q&A box. Please drop your questions in the Q&A box. And please, I have 13 people so far that have filled our poll, or I have 7 people so far that have filled our poll. Please, we need more people to fill this poll. Your feedback is very, very important to us. So like I said earlier, for those that have requested for the slides, you'll be getting the slides via your email right after the session. As soon as the session is over, you'll be getting the slides in your mailbox. So for those that would like to watch this session on YouTube, please go to our YouTube channel. Please, for those that have questions, please, the Q&A box is there. Please drop your questions in the Q&A box. Mr. Olushola is still here to attend to your questions. So for those that can't see the poll, please, you can, it's probably a network issue. So please kindly maybe refresh refresh your browser, and you have the poll pop up on your screen. So, but for those that have these polls on your screen, please kindly fill this poll. Your feedback is very, very, very important to us. Thank you. So please, for those that have questions, please drop your questions in the Q&A box, and we'll be attending. Mr. Olushola will be answering all of your questions. So for those of us that are requesting for our YouTube link, for the link to the YouTube channel, I have dropped, I'm dropping the link right now. So I've dropped the link right now in the chat box for those that would like to click on the link and go back to rewatch this session. You'll be getting everything in your mailbox. So like I said earlier, Mr. Adewale, you'll be getting the slides in your mailbox as soon as this session is over. Thank you. So for those that would have access, that would like access to this particular session, it's been dropped in the chat box. So please, I'd like to believe that we have questions. So please drop your questions in the Q&A box. So for those that are joining us on our YouTube channel, that are watching via our Facebook channel, that are watching us via our LinkedIn channel, if you know you have your questions, please drop your questions in the chat box, and Mr. Olushola here will be attending to every question that you have. Okay, so I think we have okay, so please, if you have your questions, please do drop them in the Q&A box so that Mr. Olushola can attend to them. Thank you so much for those that filled out our poll so far. Your feedback is very, very important to us. So please, please, and please do fill the poll on your screen. Thank you. So Mr. Adewale is asking, where can we get the templates and the Excel templates for financial tracking and recording?
I think I told you.
Did you get that question?
I did, and I think I explained the other time. I said there are a lot of vendors there, so you need to also test their reliance so that you don't run into problems. I know one or two vendors, and like I said earlier, the one I knew had relocated to Canada, so the support to that application is not near here around now. So, but like I said, I'll try and make inquiry to see if there are other good and strong ones in the market, and I can recommend them for that.
Okay, so Mr. Olushola will be recommending for that. So Mr. Olushola, if you could drop maybe your email address, or so that for those that might want to reach out to you after this session, please, if you can drop that in the chat box so that you can reach out to Mr. Olushola for all of these templates, and once he has access to them, he'll be sharing them with you. So Victoria is asking, can we track financial accounts both manually and automatically, or is it only one that we can choose or practice?
Yeah, thank you. That's a very good question. For manual tracking, that means you need to every week have summaries of your accounting information. That means you must balance your books at every time of the day. Every day you have a closing balance, which will be moved into weekly balances. So at the end of every week you are able to know this is what we have expended, this is what we have received or that's coming. So you can do it both manually and electronically. The beauty of electronic tracking is because it's real time. Once you do one, it's reporting. They are tied in such a way that you can easily have a glance, a spreadsheet or a dashboard glance of what your finances are. But for manual, it can be done for manual and electronically. So, but manual requires more work. More work. Your accountant or whoever is doing it must provide daily balances that will roll into weekly balances and at the end of the monthly balances. So if you want to take decision on a weekly basis, or you want to take a decision after a week or 2 weeks, you're able to go through your documentation and look at, oh, this is what we have, this is what we don't have, this is what we need to do. Then you compare with what you have in your budget, and at the end of the day, you say, okay, let's do this. Oh, we can't afford this now, let's wait. Oh, let's not wait. Okay, but this thing is urgent. How do we finance it? Let's go to a bank. Let's borrow. Are we going to be, if you borrow now and do this, then the next 1 week we believe that this thing will come true, and we'll be able to recoup this money and pay back. So both manually and electronically they can be done. But the electronic one is better because it gives you it's easier to be done and you're able to do it, get your references in real time.
Okay, thank you so much, Mr. Olushola, for answering that. Victoria, I hope that answers your question. We have another question here saying, I work with a primary school as a bookkeeper, and I would like to know whether we need to pass on losses or profits, whether from one term to the next over the course of the session, and also from one session to another session, for one to match what is in the books with what is in the bank.
That's a good one. Once you have rendered a service, then automatically you ought to have earned that income because you have rendered the service. So it's showing in your book as what? As debtors, that people that are owing you. So it's an asset. But now you have to test it. How reliable are these assumptions? Will you be able to recover them? Because assets will show that, oh, we are doing well, we have some good monies in our account. So, okay, at least we are viable. But you now have to test it. That's why you have to test those, whether you have to write them off or not. So if it's monies you need to maybe spend a little money to get, then you can go ahead and try and recover the debt. But if it's something that you know it's gone, then you have to write it off. That one is given. You have to write it off. Maybe it's over time, but you like in the first. So that means you have to do an assessment at every time. Oh, who are the people owing all this amount? Well, how was the likelihood of them paying back? Then your company will have to come up with a policy. What policy is going to drive this? So, okay, should we recognize this? How long should we carry this in our books? Let's carry it for 1 year, 2 years, and then if it's fine, then if they don't pay, then you know how to write it off. So you can continue to carry them in your books, but you know they are just book balances, they are not cash. So definitely reconciling them with accounts or your bank statement is not, it's just in your books that shows that this is how much they are owing you. So your financial statement will be there, but definitely you know you don't have access to such cash.
Okay, thank you so much, Mr. Olushola. I hope that answered your question to um the anonymous participant that asked the question. I hope that answers your question. So for those that are yet to see the poll, so I think I'd advise that you log in through Zoom to help you have access to this poll. So thank you so much so far to those that have filled this poll. Your feedback is very important to us, and for those that are yet to fill, please kindly fill this poll. So please, if you have more questions, please you can go ahead to ask your question while Mr. Olushola is still here. So while we wait for more questions, I've launched another poll right there on your screen. So please kindly help us do this. Like I said earlier, your feedback is very, very, very important to us. So please, your feedback is very important to us. Please kindly give us your feedback. Thank you. So in the absence of, so I can see someone's hand is raised. So please, for your question, please kindly drop it in the Q&A box so that your question can be attended to. Please use the Q&A box for your question. Please use the Q&A box for your question. Thank you. So while we wait for the question, I'd like to, please can we appreciate our facilitator in the chat box? Can we tell Mr. Olushola thank you for handling today's session, because today's session, you'd agree with me, has been well packed, a very, very insightful one that you can learn from, you can still go back and keep learning and relearning and unlearning all of those things that needs to be unlearned, and relearn those things that you think you know, that you know you would get more from, and from this session, and also learn new things even from this session. Thank you so much, Mr. Olushola, for taking out time off your busy schedule to take this session. I'm pretty sure that our participants have learned a lot even from their feedback in the chat box. We want to say a very big thank you to you. Abiodun Adewale, you're requesting for Mr. Olushola's email. It's been dropped in the chat box, but I'll be dropping it again so that you can have access to it. Mr. Olushola has dropped his email in the chat box for those that might want to reach him via his email address. That's sholaolajuni@hotmail.com. Sholaolajuni@hotmail.com. Ojajuni, apologies, sir. Shola Ojajuni
Yes.
at hotmail.com. So I've dropped it again in the chat box for those that missed it earlier. So that is SHOLAOJAJUNI at hotmail.com. I repeat, SHOLAOJAJUNI at hotmail.com. Thank you so much, everyone, for taking part in today's session. Thank you so much for taking our time from all of your busy schedules to attend to this session. I'm pretty sure we have learned a lot from today's session. So for those that, might want to learn more. Oh, okay. Mr. Olushola, we have another question here. I think the person is saying that their question wasn't answered, didn't get a direct answer. So the person is asking that, do they add whatever loss amount or profit amount to the next term, as well as move to the next session to be able to match what is in the books?
That's what I said. I said once it's a loss, you charge it out of your books. That's why I said there has to be a policy by your organization. How long do you want to recognize an income that has not been paid? If it is, if you believe you do an assessment, is this low, what's it called, debt? Is it viable? Can we still recover them? Then you say, okay, if you can recover them, you can carry them forward into a new year and continue to recognize them as an asset. But if you are sure that this money is gone, then you charge it out of your books the following year. So it's both ways. It has to be something that is done by an assessment, and it has to be based on your policy as an organization. So you can keep recognizing them if you believe that the debtor says, "Yeah, I will pay. Please give me some time. This and that," giving you stories. But at the end of the day, maybe they will pay. Maybe because they are good customers. It has never happened before. But some that are maybe they relocated, and calling them, their numbers are not going again. So what do? You take it to the book and charge it out of you and reduce your profit from that. So that's how you are going to deal with that. So there's going to be an assessment, there's going to be a policy on that, and that's how you're going to do it.
Thank you so much, Mr. Olushola. I hope this time around your question has been well answered. Sherifat is asking that she's a farmer and she records her sales and expenses every week, but she doesn't know what to do with the data.
And that's good. At least you have started, and that's a good step. Once you are recording your sales and expenses every day, that's the foundation of a good accounting practice. What you need to do now is summaries. You have to now say, okay, at the end of the daily sales, the daily expenses, you put them in summary on a monthly basis. Based on that, you are able to know whether you are doing well or not. And now, because you are keeping your records, you can get an accountant or a bookkeeper or an auditor to come and prepare your books for you. So it's easier for you to understand how your business is faring. At least, like I said, the first thing is that you have started on a good footing by keeping the record. If you want to do it on your own, just do summaries at the end of the day, every month, every week 1, week 2, week 3, week 4. Oh, this is total for this month. Expenses total for this month. How much you look at? Okay, how much is the net? The net is, oh, this is the gross or the net, and this is how much I think our company has. Is it in cash? Is it in debt? You know it. If it's in debt, then you quickly know how do I run after my debtors? How do I run after so that they can pay me? Then if it is cash, this is how liquid we are. Then I can be able to do other things. Then you also have to factor some other things into it. But at least for the fact that you have started keeping your record, I think that's wonderful.
Hey, thank you so much, Mr. Olushola, for that. I'm pretty sure everyone can agree that today's session has been fully packed. So for those that dropped their names and their phone numbers earlier for the free business registration, please be on the lookout. We'll be reaching out to you before the close of business today to request every single information that we need to go ahead with your free business registration. So thank you so much, Mr. Olushola, for taking out time from your busy schedule to
Thank you so much.
attend to take to this session. We really appreciate you, and we
Thank you
do hope
for
and we
having me
trust
too.
that when next we reach out to you, you'll be available to take our our participant through another very well insightful, well packaged and educative session. Thank you so much, everyone, for attending to the
Thank you
session.
so
This
much. I
is once
appreciate
again.
it. Thank you for having me. It's a pleasure here.
Thank you,
I
sir.
appreciate
Thank you so much, sir. Thank you, sir. We really appreciate you, sir. So this is
can I take my
yes, sir.
leave? Thank you.
Yes, you can. Thank you so much, sir. So this is the Lagos State Employment Trust Fund. Like I stated earlier when we started this session, you can go to our social media platforms. You can go to our Facebook, go to our LinkedIn, go to our YouTube channel, go to our LinkedIn, go to our YouTube channel, go to our Instagram page at Lagos State Employment Trust Fund on all of these social media platforms. If you'd like to have access to all of our programs, if you also like to have access to any of our programs that we have ongoing. If you'd like to have access to previous recordings of all previous sessions that we've had so far at the Lagos State Employment Trust Fund, you can go to our YouTube channel, and we would be you would find all the recordings for the previous sessions there that are very well packed, such as the one that we brought to you today, and also be on the lookout for further further sessions that we'll be having on our sessions that we'll be having as regards our master classes and our advisory sessions. Thank you so much, everyone, and would like to say thank you once again, and do enjoy the rest of your day. Thank you.